Dear viewers, welcome to this episode of Expert Speaks. I have brought to the studio today an eminent expert in the field of inheritance planning. These days, the NRI community is growing by leaps and bounds. We have done a video in the past which says the NRI community is 32 million strong. This is an opportunity as well as this is also throwing challenges. All these NRIs are having their parents back home. They have assets back home. When they move to another country, it becomes very essential that their assets are secured well. And after their parents' time, the assets are passed on to the legal heirs without much of a problem. So we are discussing this topic in today's episode with subject matter specialist, Mr. Jatin Popat. Stay till the end of the video. We are going to discuss very minute, very fine points in this journey of transferring of assets held back in India to the NRI community living outside of India. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
The guest on our channel today is none other than Mr. Jatin Popat. Mr. Jatin Popat is the founder and CEO of Wilgenie, which is India's first and most trusted estate and inheritance service provider. Mr. Jatin is a lawyer and qualified company secretary with over 25 years of experience in the legal space. His company, Wilgenie, has helped over 15,000 plus customers in estate planning across 480 cities and in more than 32 countries. A record impressive indeed. Wilgenie is the official estate planning partner of many corporates including HDFC, ICICI, Tata, IIFL, and many more leading financial institutions of India. Welcome to this show, Mr. Jatin Popat.
Thank you, Doctor, for this introduction of our company and myself. And happy to be with you. And we'll take it this session for the good awareness for all your viewers, and it will help everybody to understand this subject well.
Thank you, Mr. Popat. Now we have this NRI population growing year after year. This is a population which is asset heavy, asset rich. They have lots of asset back home. Their parents are living here. Parents have also accumulated quite a sizable amount of assets. While it's a good news that the NRI community is growing, it's also increasing the challenge that what happens to their assets held back home in case if the parents leave without proper preparation. It can throw a big challenge in this way. So why do you think a proper succession planning ahead of time becomes very critical for the NRI population? What do you have to say for our audience?
So, Doctor, basically the estate planning is, we know that people are missing most of the time in India because of the awareness is low, and people feels that everything will be taken care by family well without any dispute. However, the time has changed. So for NRIs where the size of the wealth are likely to be little higher than the common man or the people, average people. And there are issues around the cross-country rules about the succession, about the taxation, about the process of transferring the asset. And all the process might be overwhelming to the NRI community, whether they need a wealth now or they may need later. What is the taxation in India? What is the taxation in local country? All these issues are there where there is a confusion for many NRIs, and they always need help to understand it, and accordingly they can guide their parents or their own wealth in India.
Mr. Popat, we have done many videos on this particular subject. Different guest speakers have come and spoken on the subject. One thing which intrigues us is there are many instruments which can be used for succession planning. People have used wills, people have got nominations in place, people talk about power of attorney, people talk about family trust. Can you, for the benefit of my audience, highlight which instruments are more suitable, or how should they approach this with so many instruments at their disposal to make sure that the assets that they are living back here in India are transferred to them whenever that situation comes for them?
So we have seen various type of profiles, NRI profile we have served for last 10 years, more than 30 countries NRIs we have served. And we see various type of the asset base or the family mix. Some families has got business also. Some families has got the wealth accumulated more in the country than the India. Some people have more wealth in India because of the returns are good. So everyone has different profile of the family and the need. So we normally suggest the standard thing which is applies to not only India but other countries also. One is a will document for the assets of the parents or maybe the NRI individual, or along with the family trust because of the various reasons for the tax planning, for the transfer of assets and those stuff, and power of attorney because of the issues when they are not around to attend the matters in India, or incapacity during the health issue. These are the three standard documents that I think many developed and evolved countries are doing for various families, and it has been routine for other countries where it is evolved. Other instrument that sometimes we offer are possibly gift deed, or sometimes it is the business changes constitution. So all these things depending upon each family's requirement. However, a will document, a family trust, and the power of attorney are the three standard thing. And normally, people are taking these as a one of the simplest the estate planning documents. And since they are also aware of these instruments very well because of the local country laws there, and it is routine to them. But in India, yes, many of the people, they don't know much about the estate planning or will and trust. For them, it is a routine, like taking any medical insurance every year.
We have heard about will. We have heard about power of attorney. I am given to understand that the power of attorney can be used only when a person is alive. That moment he passes away, the power of attorney loses its value. So is that correct?
True. So power of attorney is a limited use, but yes, during the incapacity or a medical condition, one has to clearly mention about the springing powers given to the family members. Those concepts are a little new here. Many families we have seen, even somebody's passed away, they don't inform the authorities and they continue to operate, which is illegal and it is not proper. As soon as person dies, the power of attorney validity is no more valid. Yeah, I think what you say is correct.
What about this family trust? See, the general assumption that is there in the minds of NRIs or general public is that trust is not for me. Trust is for the very rich families. It's not for each and everyone. Is there a specific section of people who can use this family trust? And when I interact with a lot of inheritance specialists, the thing that comes to our notice is that family trust is probably one of the most efficient way of inheritance transfer. It's also a management of taxation in many countries. Can you take us through this family trust? How does it help? Who can do it? And points that our audience need to know about the family trust.
Yes, Doctor, it is true that family trust is the more safer way and a secure way to transmit your asset. Because what is happening that in a will, a person has given his wishes or her wishes to give the asset to the family member. However, the interpretation or there could be challenges to prove that, and the whole process of transferring from A to B may take a lot of time. And if it is two countries, then you can understand the laws of both the country for the tax law and those things. To avoid this whole hassle for the family members after somebody passed away, a family trust is a more safer and secure way, because during the lifetime you are transferring some of your asset into the trust like a gift given to the family. However, when you give a gift, direct gift to the family, they can become owner immediately. But if you gift to the trust and you manage this thing for your life and later on to the trustees, you are given a gift which is deferred way. So they get only fruits out of this asset. They don't get the complete wealth to own it. So in a way, you are driving your wealth even if you are not there. Plus, the family will not have hassle of transferring the asset to them, because you already transfer. They immediately can use the fruits of it, the income. Okay. So the family trust is something a gift given within your lifetime jointly for yourself and your family. And after your lifetime, it can be for the beneficiaries, which can be spouse, which could be kids, which could be charity, which could be any other purpose. And that way, this whole thing is being taken very positively by some of the people who has issues. So who should make a trust, which is important. So many a time the purpose of smooth transfer where wealth size is anything like 5 crore above, people are doing it for the sake of smooth transmission. However, there are other purposes. Like a person having a couple has got a special child. They know that they are not going to, the special child will not be able to manage the wealth themselves, even they leave behind the big wealth. So they have to have somebody to take care with the rules. So many people earlier used to write a guardianship in a will and hand over all the wealth to the guardian for the care of the life care of the parents or the special child. However, this is just trusting him. They may use it, they may misuse it. But in a trust, you have completely mentioned the rules, how they will manage, how they will discipline to the investments, how they will do tax filing. So it is really a rule-based management of the wealth. For a special child, some people has got issues on the creditors, liabilities. Some people has got matrimonial issue. So they want a ring fencing of the personal assets. So they create a trust because those ring fence assets are not being attacked by any government or any creditor. So that is something which people are doing. Some people who are following a Muslim religion, where the will writing is restricted to 1/3 of the wealth because of the Sharia law. So many Muslim countries and families, they do this type of trust because they can, via trust, they can completely give to the 100% of the wealth to the family, the beneficiaries. So that is something was also a reason for many Muslim families doing the trust regularly. The people with a large business, the people have NRI connect cross-border, like kids are in foreign country and their wealth here, or the parents says that my wealth is here and they are there. So there are so many countries where inheritance tax is the issue, where in India, we don't have inheritance tax since 1985. However, it might come. That is what we hear for the last few years. But currently, like in US, up to 40% is the inheritance tax. Japan, 55%. In Belgium, 80%. In all the European countries, the inheritance tax, which could be termed as estate tax, inheritance tax, that tax, which goes up to 50%, 80%. So somebody is living behind the wealth in, say, European countries or USA or Japan or UK, the lot of wealth they have to pay from the inherited money. So how to safeguard? If you do a good planning, then you don't have to pay those taxes. So people who have wealth in both the country, if they combine it and they try to mention everything in the one will, they're likely to have a good amount of tax to be paid to in that country. So it is better to keep two separate wills, two separate trusts, and you don't connect it. Otherwise, there is an issue that every year the tax will be paid to the government of those country and also the one-time inheritance tax. So keeping the wealth in India in a family trust, the individual doesn't have to tell to the foreign country that I have a wealth. It is a family joint property. So he says it is not my wealth. So there are so many ways one can do a tax planning with the trust model where the creation of trust can be safeguarded the wealth without the tax. The returns in India is quite good than other countries. So even for that sake, keeping the wealth in India in a trust form where you can manage remotely with the local trustees and you can enjoy the wealth growing whenever you want the money, you can take it back peacefully and it can be kept for a longer period for the next generation. All these benefits are so good that people are not only creating a will, but they create a trust and pour in a lot of wealth to the trust, which could go up to 90% of the wealth. Even some of the parents, when they leave India and they get citizenship along with the kids there, they also create their trust in a way that it gives them the life care and later on it is given it to the kids or the future generation. So there are the families that we have served which has 5 crore of wealth up to 100 crore or maybe more. They have done this type of planning where inheritance tax can be planned well to minimize the tax burden for one time or maybe later on every year of income of those wealth. So this is the good reasons that one has to really consider. Family trust is one of the best model because the transfer process can be avoided, the government laws, the probate, so many complexities can be avoided by just creating a trust and pouring some of the wealth to the trust. So that is a very clear-cut wealth already transferred to the family, but can be used in a in a deferred manner.
Mr. Poppert, thank you very much for bringing to the benefit of my audience these points about the trust. I'll digress a little bit here, and inheritance, I'll ask you one another question. These days, marriages are very fragile. People get married for staying together for life. Something goes wrong, and in this marriages were to break, alimony and a lot of issues and a lot of malpractices have crept into this. Does this family practice also protect the wealth because of erosion happening because of a divorce?
Yes. So again, the matrimonial issue, as you mentioned, the world is moving into direction where people have their own independence, they have their own lifestyle and culture. In India also, we are seeing this as growing very fast mode like the Western countries. So country-specific matrimonial laws are there, like will and estate. The law for the matrimonial issues are there. In India also, quite a few families have approached us, which are large business families, where the kids are young, 30, 35, and they are getting married. They created trust to just safeguard that something goes wrong in the family life. There should not be a good alimony claim on the large property. So they create a trust for the kids and their kids, not the spouse. So they don't include spouse immediately. Maybe later on, after a few years, they may add. So this is the planning people are doing to safeguard because of these new issues arising in the culture in India and abroad. And that is where some of the countries, even the trust or food citizenship concepts are there, where even trust sometimes is not safer. They create companies, they create different modes of ways there. They can minimize this risk of alimony.
Well, Mr. Poppert, let's say that somebody wants to create a family trust. What does the process look like? How long it might take? And what could be the cost that could be involved? I know it is difficult to give a ballpark figure because the individual circumstances are different, but just from a understanding perspective, how does all these things work out like?
So typical, I can say that if the family, whether it's NRI or Indian or combination of Indian plus NRI, we try to work on the estate plan stage first. It takes 3 to 5 days time to understand the wealth the family makes, what are the thoughts for the future vision without the legality. Then we come in place to suggest them what are the good way they should look at it from the inheritance side or the tax side or the foreign remittance side. So there are 3 aspects for wherever the NRI is concerned, because in India, the tax law, the inheritance law and the foreign action law has to be monitored and seen whether everything is complied for the India law. Vis-a-vis the foreign country, what are the taxes? We are not expert in the all the countries of foreign taxation or those parts. However, we have got a brief idea where we can initiate the discussion and they can do there. So this estate planning takes about 3 to 5 days time, depending upon the complexity and wealth. Sometimes it goes up to 1 month when there is a large business houses there. Then there is a process of have a discussion via online or the one-to-one meetings to explain them what are our thoughts, what are the recommendations. They can accept it, and then we start the creating the will, the trust, the power of attorney, and that takes about 2 weeks time to create those type of trust. And then they want a registration to be done. If they are not in India, we suggest them to do a notary, or they can go to Indian embassy to sign before them the will or a trust or power of attorney. After that, the trust is created, then we have to apply for the PAN card and open a bank account, which takes another 3-4 days time. And thereafter, they can start pouring in the wealth. Typically, it takes about 2 to 3 weeks time, depending upon how far they are available to give us information or the details and their time to go through the trust deed, what we suggest. So trust deed is the draft that we create with their consultation of the rules and all, which takes our legal team another 5 days time overall. So out of the 2 to 3 weeks time, 5 days is only for drafting and taking the suggestion from the clients. So this is a typical timeline for creating a trust. For the cost, as you rightly said, that it is not unique to everyone. But yes, we have done the trust for the various size and various profile. It is ranging from estate planning, will, trust, and power of attorney. It starts from roughly around 2 lakhs and above. So all the combinations are something where our team, both lawyers, company secretaries, chartered accountant, the FEMA expert, we add on those people depending upon the needs and then clarify their doubts. And many a times we suggest the local partners who can help them for their local tax laws or local inheritance. We mostly do only for Indian assets and all the planning for India tax side, and some of the suggestions for the foreign countries also.
Mr. Jatin Popat, thank you very much for all these inputs for the benefit of my audience. We wish you all the best in days ahead, and we call you to solve other problems that could be there in the inheritance sphere from time to time. Thank you very much for your kindness to come and present this topic on our channel. Thank you very much, sir. Dear viewers, hope the video that I have done today helped you to understand various aspects of inheritance planning and how family trust is one of the finest means of transfer of your assets held in India, either owned by you or which belong to your family to your account in a tax efficient way. If it helped you to understand all the finer points, do not forget to give me a thumbs up. By the way, I have a good news to share with you all. We have included inheritance planning in the various services that we offer for you. If any of you are looking for any of the services in the inheritance planning, you can make best use of our services. All that you have to do is, our numbers are given here in the description box below. We have also provided a link for the WhatsApp. Just click on the link. It takes you to the WhatsApp. Just send us a message with what services you need, and we will connect you with the right service providers. Do not hesitate, and if you have a need, send that message right now. By the way, thank you very much for watching this episode on NRI Money Clinic. Do not forget to share these videos with your friends and relatives, near and dear ones, and all the social media handles on which you are connected with. I shall be back with you next Tuesday with yet another expert and then with another topic. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.